The money is broken. They can't stop printing it. Inflation, what's going to happen, just to map this out, is in my opinion, inflation is going to get worse. It's going to get so bad that people are going to be screaming about it. And then hopefully some politicians are going to step up and say, hey, this is really bad. We got to fix this. And they're going to have a proposal to take us back to the gold standard, to take us back to to take us to a standard, or some combination of the two. And if the pain is large enough and enough people are aware that that is the correct solution, it'll happen. And I think that it's one of those things where the early adopters will be rewarded compared to the people who are late in their adoption. And so everybody just get some Bitcoin. Doesn't matter how much, just get some, get started. If you have an asset that can go up 5x in like 6 months or a year, and you sell it short, well, the losses you take are going to be really large.
Lepard points out a critical flaw in today's financial system. Debt is increasing faster than the economy can grow. When this imbalance occurs, there are only two possible outcomes. Either we face a deflationary collapse as the debt becomes unsustainable, or central banks step in and print more money to inflate the debt away. Based on historical patterns, policymakers consistently choose the latter. They print. The charts are heating up, and so is this channel. Now is the perfect time to hit like and subscribe before it goes parabolic.
If the markets start to malfunction, i.e. if the stock market falls a lot or the bond market falls a lot and interest rates go up a lot, the net effect of that is the Fed comes to the rescue. They've always done it historically. So I think, whether Jay Powell wants to cut rates or not, I believe that as the markets continue to play themselves out this year, you're going to see a situation where he's forced to change and print money. And they're in the title of the book, The Big Print. So I think the big print is coming. And I'll go a step further. The last couple of prints were big, but increasingly big. Like Bernanke printed $3 trillion over 3 years. Powell printed $5 trillion over 18 months. I think the next one's going to be bigger. So, and ultimately inflationary, which is, again, back to why you want to hold things that the government can't print. There's a part of the population that's kind of becoming aware of the fact that something's wrong with the money. You can see it. I mean, there are a lot of people, there are a lot fewer Bitcoiners than there are gold bugs. Gold has been out there longer. It's more widely distributed. And, I think it's very interesting what's going on with the gold price right now. As most people who are paying attention would notice, it's up 60% in a year. And it very rarely does that. And so, to me, that's happening because more and more people are waking up to the issue that we're talking about, the broken monetary system. In a broken monetary system, what you need to do is buy assets that the government can't print. And there are really 2 or 3 that fall into that. I mean, real estate's the fourth one, but the big monetary ones that fall into that bucket are gold, silver, and Bitcoin. The underlying thing that's broken is the money, and it's fiat currency and the printing of fiat currency. And so, we need to solve for that. And there are 2 possible ways of solving. As Groman points out, they could reset things in terms of the gold price, and gold's been around longer and it's a bigger market and so forth. And so there's a chance they'll go in that direction. But the other solution is to reset in terms of the Bitcoin price. And I think there's a good chance we'll go there as well. And maybe it's a 2-step thing. Maybe we do gold first, then Bitcoin. Who knows? But we need to do a monetary reset. The money is broken. They can't stop printing it. Inflation, what's going to happen, just to map this out, is in my opinion, inflation is going to get worse. It's going to get so bad that people are going to be screaming about it. And then hopefully some politicians are going to step up and say, hey, this is really bad. We got to fix this. And they're going to have a proposal to take us back to the gold standard, to take us back to take us to a standard, or some combination of the two. And if the pain is large enough and enough people are aware that that is the correct solution, it'll happen. I mean, that's it's just that simple. Now, it's hard to envision that today because we're not even close to that point yet, but that's how I see things unfolding. And that's why I say I kind of give it a, what are we, 2025 right now? So I give it maybe a 5 to 7 year time frame for that taking place, because I think the problems are going to continue to compound, and I think that it's one of those things where the early adopters will be rewarded compared to the people who are late in their adoption. And so, that's why I wrote the book. That's why I pound the table so hard for everybody to just get some Bitcoin. Doesn't matter how much, just get some, get started. Fiat currencies like what we have now, that the average lifespan of them is kind of 40 or 50 years. And we're like at 52 years or 54, 53 years since we went off the gold standard. The problems are getting larger, right? I mean, The GFC was a problem. COVID was a bigger problem. I think the next one's going to be even bigger still, and that's why I titled the book The Big Print. I mean, we've had two big prints. We had one in '08 and we had one in 2020. And we're going to have to keep having them. And the reason for that, it's just math. If you grow the debt faster than you grow the underlying GDP, eventually the GDP can't support the debt. And either the debt collapses in a depression-like scenario, or you print more money to keep the whole thing going. And historically, of course, what they've always done is they printed more money. And I believe they'll do that again, because even as bad as inflation is, it looks better than the whole thing collapsing. So, and politicians will choose inflation over collapse. If you have an asset that can go up 5x in like 6 months or a year, and you sell it short, well, the losses you take are going to be really large. And so and hiding that is going to be harder. So I'm not saying there won't be paper Bitcoin. I think it's a risk. But I think that based on what I've observed, the size of the futures market for Bitcoin, the size of the derivatives market, I mean, there's an enormous futures and derivatives market for gold, enormous. And so they use that to manipulate the price. The size of the futures and derivatives markets for Bitcoin are tiny compared to the total supply. So as I say, I don't think they've done it yet, but it's a risk. I mean, it's certainly a risk. But I think Bitcoin's going to overtake things so quickly, they're not going to really figure out how to do it.
Lepard sees a major political shift. The red team now mostly supports Bitcoin, but he warns this could change quickly. Future leaders like Elizabeth Warren and her anti-crypto army might crack down. That's why self-custody is crucial. Keeping your Bitcoin in an ETF or custodial wallet leaves it exposed to government control. He jokes that boating accidents, a nod to conveniently losing private keys, are one way to keep your assets safe and untraceable. Let's go back to the interview.
We live in a Bitcoin-friendly environment now in the United States. I mean, to me, it's really kind of stunning. I mean, I remember very clearly with a lot of friends talking about Bitcoin, and they kind of understood the idea, but they said, well, the government's going to shut that down. They're not going to let you have a government that competes with the dollar. And then in January last year, along comes the ETFs. It's like, whoa, that's not the government shutting it down. That's them allowing people to buy it. And then Trump gets elected, and now we have and Warren had her anti-crypto army, but Trump gets elected, and now we have a Bitcoin strategic reserve. And so now the Fed is saying they're not going to be touching what the banks do. They're going to let the banks do it. And and then some big thought leaders in finance changed their views on it. I mean, probably the most important one in my view was Larry Fink, who runs BlackRock, which is the largest asset manager in the world, and was very Bitcoin negative, but he was then smart enough to understand what it is and realize, this is going to happen with me or without me. I better get on the right side of this. And so now he's become a Bitcoin bull. And even in his last annual report, he talked about how there's a theory under which it could become the reserve currency. I mean, I think he gets it. What I see is just a continual trend in the United States in favor of Bitcoin. I don't know where the Loomis bill stands. I don't know what the odds are of it passing. They used to be quite low. I think they're growing, but you've got Eric Trump and his father, are Bitcoin bulls. You've got Lutnick, who's, Secretary of Commerce, and he's a raging Bitcoin bull. And you've got Bessent, who said he's positive on it. I mean, he's more of a gold guy, but, this is all very positive stuff. I mean, the only caution I would add, though, is that the blue team is still out there. And let's say, for example, there's a scenario where in this 4 years, things don't go the way we want. And 4 years from now, the red team loses and J.D. Vance is not elected as the next president, but, somebody from the blue team is, AOC or whoever. And that team is very anti-crypto and very anti-Bitcoin. And so we could see the pendulum swing the other way from the government, where they could come back and say, well, we're going to tax this, we're going to grab it, we're going to do whatever. And I don't know that that'll happen. I hope it doesn't, but it could. So it's in a democracy that changes. The House changes every 2 years, and the presidency changes every 4 years. I mean, we're in a good environment right now, but there's no guarantee that's going to continue. So I would just offer that warning. And I think that's why, for now you're fine, but I think longer term, these ETFs are potentially honeypots that the government could grab. Whereas if you own, your crypto and your Bitcoin in self-custody, it's going to be a lot harder for them to say turn it in. I mean, they'll say turn it in, but you can kind of thumb your nose at them and say, well, I lost it. I don't have it anymore. It's a boating accident. I think that's actually important, if you think through the politics of where we might go. If you look at the U.S. fiscal situation, the U.S. government deficits, the U.S. printing of money, you come to realize that that trust is misplaced. And the market's giving you signals of that, right? I mean, Bitcoin hit a new all-time high of 106 or 7 late last year, and gold is hitting all-time highs almost every day. To me, those are two very loud signals. They're like alarm bells going off, like, hang on, people are losing trust. The other thing that's going on that's interesting is the dollar, even compared to other pieces of fiat currency, because all currencies are fiat, the dollar's going down. And the dollar is the world's reserve currency still. That's slipping, but it is. The dollar at the end of the year was 109. Now it's 99. So, in 1 quarter, a little over 1 quarter, it's lost 10% of its value or so. Yeah, I mean, I see signs, and you're also getting some signals from the insiders. Like I think I mentioned this on Danny's show that you're seeing that the Federal Reserve was they were shrinking their balance sheet by what they call quantitative tightening, which is the opposite of printing money. They were doing that to the tune of $25 billion a month, and in the last meeting they cut that back to 5. So I think they did that because they foresaw the tight monetary situation. They've also been floating some ideas. One is maybe opening up a swap line to some of the hedge funds that are involved in a basis trade, and that's complicated. But basically, the basis trade is these guys buy government bonds, and the big problem the United States government has is it's got a lot of bonds out there to sell, and that number is getting bigger every year because the deficit's not getting smaller. In fact, the deficit's getting bigger. And so, if the bond market gets to the point where it says, we don't want to hold these things anymore because we know you're going to print, then they're going to keep selling them. That's going to shove interest rates up. Higher interest rates mean that the government pays more for those borrowings. That means the deficit gets even bigger. And what I'm describing here, can you see how there's a doom loop here? So the deficit gets bigger. They got to sell more bonds. The bond market's a fixed size. Interest rates go higher. That means the deficit gets bigger. I mean, this is what I call an emerging market debt crisis.
Lepard points to the sharp decline in the US dollar from 109 to 99 in just a few months as a major red flag. For a global reserve currency, a 10% drop is not just unusual, it's alarming. This kind of movement typically signals deeper economic concerns. At the same time, both Bitcoin and gold are reaching new all-time highs. Lepard sees this as the market flashing warning lights. Investors are losing faith in fiat currencies and seeking safety in hard assets. The message is clear: trust in traditional money is eroding, and the financial system may be facing serious structural issues. You survived this one, now gear up for the next. Click right here.